Welcome to the Edge of NFT, the podcast that brings you the top 1% of Web3 today and what will stand the test of time. We explore the nuts and bolts of the business side and also the human element of how Web3 is changing the way we interact with the things we love. This podcast is for the dreamers, disruptors, and doers who are pumped about this ecosystem and driving where it goes next.
All right, I'm Richard Carthon, and this is the Edge of NFT, and I have some amazing guests with us here today. We are at Bitcoin Nashville. We are at the side event with our friends over at Portal DeFi. This is a sponsored episode, and we're excited to learn more about all the amazing things that they have going on. So first up, we have Chandra Duggiralaand, who is an entrepreneur operating at the intersection of technology and progress. He's a product builder, Bitcoin fanatic, and observer of human behavior. And next, we're going to talk with George Burke, who is a fintech executive capitalizing on tomorrow's trends. He has 3 exits. He is a go-to-market strategy growth specialist, masterful musician of 8 years of cryptocurrency and blockchain experience. He runs the world's first Bitcoin meetup and among many first angel investors in Ethereum. So Portal is the safest and easiest path to Bitcoin from chains and L2s. And we're going to be talking about Bitscaler, which is the based infrastructure in ushering an era of custody, less cross-chain transactions that are fast, seamless, and secure. So let's jump into it. Gentlemen, pleasure to be here with you both today.
Thank you for having us here, Richard.
Of course. So I want to kick off with something really interesting, and we're excited about this because today's conversation is announcing the launch of Bitscaler White Paper. And it's outlining the vision of scaling blockchain solutions, and it serves as a foundational piece for understanding how Bitscaler aims to enhance the efficiency and accessibility of blockchain technologies. Chandra, with your extensive background, have been doing a ton of tech innovation, and you've been instrumental with this white paper. I want to kick it to you first around this technical and the position that you put into this insight. Tell us about the white paper and what it's going to be bringing towards Portal.
Okay, great question, Richard. The Bitscaler white paper describes the foundational infrastructure piece that we've developed to make cross-chain AMM and non-custodial cross-chain exchange possible. So I'll go into a little bit of detail about Bitscaler white paper. So the problem for the longest time we've had in crypto is that when you wanted to do cross-chain transactions or operations, you had to have a trusted intermediary or a third party in the middle. And so from 2010 to 2019, we described that as the era of centralized exchanges acting as escrow agents or custodians for assets, right? The protocol is this: send me your coins, exchange the coins with whatever you wanted to do, and then I send you back coins. Send me the coins works, I send you back the coins, didn't work so well. So we've had a lot of exchange collapses, hacks, a lot of people lost their funds from all the way from Mt. Gox to FTX. 2019 to 24 was the era of on-chain custodians. So all these bridges, walls, multi-sigs, wrapped derivatives on other chains held by a bunch of validators, that is on-chain custody. So instead of trusting a single entity, you're actually trusting a bunch of entities with multi-sig or some sort of a custody mechanism. And that also empirically turned out to be a terrible. Bridge collapses are numerous. We don't have to go through all the names, multi-chain, like wormhole, you name it. 2024 forwards is going to be custody-less cross-chain. And how is it different from all the technology that preceded it? Is it doesn't require any new opcodes. It works as a layer above Lightning. So it's a layer 3 system for creating these AMMs on Bitcoin and corresponding sidechains, L2s, other L1s. And if you might want me to go into a little bit of detail of how this architecture of these contracts is, how the atomic swaps work, all that stuff.
I would. That's actually going to be a follow-up question either for you or George around the cross-chain compatibility of it too, because that's another huge component of what I think makes Portal so remarkable is that interoperability component.
I can get into that actually. So, we've set up this camera equipment. I've been doing interviews of other layer 1 and layer 2 blockchain token issuers. And one of the questions I ask them, if you want to trade your token for Bitcoin, or you want to trade your token for Solana, can you tell me the steps it takes in order to trade that? And mind you, you're not using a centralized exchange. What do you do? So they start recounting. Okay, but first I need to think about using something like Wormhole or Layer 0. So I'm going to have to bridge my token over to this other compatible software, this blockchain. Then once I have my token on that blockchain, I then have to find a DEX that will be able to trade for Ethereum. And if it's Bitcoin, good luck, because I think there's really only one Bitcoin AMM that actually exists today, and that's actually still custodial. So we'll be the first ones to do it non-custodially. Point is, they are recounting the steps and realizing, wow, how inefficient it really is to trade BTC for their own token. So they're really excited to be able to have a one-click swap.
Yeah, that's powerful. Like I remember when I was first speaking with you both about doing this and creating Portal, like truly having one step. It's unheard, like it revolutionary back when we were discussing this back in like 2021, but even more so now in 2024. Fast forward 3 years later, we're still not there, right? Well, in a couple of weeks we will be.
Yep.
So actually, as a follow up to that, testnet is coming up soon. So can you tell us a little bit more about that?
Yeah. So public testnet will be end of next week. Private testnet, we're already testing it internally, testing the client side of things, the growing technology, all the edge cases, scaling, all of that stuff. But the exciting thing about this is you can abstract all of the steps, right, that involve taking this asset and then converting into that asset. The key is not having any chain of custody in the middle. So we're very excited, and I think people are going to be super excited when they see the product out and how easy it is and how by default it sets up all of these Lightning channels for you. It's compatible with Lightning. So, when you're doing a swap, the first thing you will realize is how fast it is and then how cheap it is, because these are not L1 swaps. These are L3 swaps. And Bitscaler enables us to actually create two things. One, a variety of transactions, not just, pay to public key hash, pay to script hash, but a variety of transactions. So you're horizontally scaling the types of transactions you can do Bitcoin to cross-chain. And then it increases the throughput as well, because when there is this, one of the constraints of Lightning is when you and I have to form a channel with each other, we have to have an anchor transaction that has to be on-chain. And then when we close that channel, we have another channel that, another on-chain transaction that has to be on-chain. And you pay on-chain fees once, twice, you wait for confirmation cycles twice. And if it's a non-cooperative close, then you do two transactions. So it's very inefficient. The concept of a channel factory, which Christian Decker came out with around 2015 or 2016, is that you can abstract away all of these N of N channel formation. Basically, what you do is there's a bunch of people who sign one N of N multi-sig to do the hook transaction on chain. Allocation transactions are the output UTXO outputs from the transaction. They're all off chain. So all of the channels that are formed between N to N parties from that N of N multi-sig are going to be off chain.
Right.
So you don't need on-chain footprint. You're not actually bombarding the Bitcoin block space with anything. And then you actually have these hub and spoke one-to-one channels between LPs and traders that are trading against the same. And the corresponding thing works on the other side, right? All of these are atomic swaps between these parties that are involved. So there's traders, there's LPs, and then there's this spot that actually people are trading against. Every one of them is an atomic swap. Three atomic swaps. That's why they're super fast, super cheap. Well, I shouldn't say super cheap. The market will set the prices for them because that's how it should be. But it's not going to be as expensive as doing this on chain. Nowhere close.
Right. And I want to stay there for a second, right? So and George, I'm going to apply this to you because you brought up a couple of things that I want to unpack a little bit more. When people think about these DEXs, usually they can thinking about just trading anything on Bitcoin. It can be slow. It can be expensive. And the other part of it is security, right? Like how we make sure that they're safe and everything works and flows well. So how have y'all addressed those challenges?
One thing that you need to know is that when it comes to DEXs, Bitcoin is not even in the equation. no one's even thinking about trading Bitcoin inside of the DEX. So you have people who are essentially siloed to their EVM communities. Maybe they want access to Bitcoin. How are they doing that? Right now through WBTC. So they're able to trade WBTC, which is a wrapped Bitcoin. It is, and the worst kind of wrapped Bitcoin, because it is held by a singular custodian. Should they use the underlying BTC? I don't know what the hell. Thankfully, they haven't, or if they did, we don't yet know about it. And so the system will continue to work as long as we are blind to its inefficiencies and its security. We want to do this without REC. This is what a bridgeless future could look like, is the ability to swap an EVM token for Bitcoin, or even a Bitcoin-based token. Taproot assets that are coming out, we have BRC20s, we have runes, we have ordinals. All of these do not need to be racked onto another chain in order to make them compatible for DeFi.
And I just want to stay there real quick.
Yeah.
That's incredible. It's like that's the first I'm hearing of the DEX being able to do that. Like, and that's why I just want to really shout this out and why I feel as strong as I do about portals, because like this hasn't been done in the Bitcoin ecosystem.
No, this is a foundational piece of infrastructure for Bitcoin, because eventually, so the thesis that we have is that Bitcoin block space will transform from being the settlement layer for just BTC to the settlement layer for millions of markets. Mm-hmm. And what are these markets? Every single L2 or sidechain is a market that actually wants to have frictionless, custody riskless, easy peg-in and permissionless peg-out back to Bitcoin. And so if they implement Bitscaler, basically our liquidity router, it's a couple of contracts. There's a multi-party channel HTLC on the Bitcoin side of things, which creates the the liquidity pool. And then there's a corresponding contract on the Turing Complete smart contract platforms, whether it be L1, L2, whatever, EVM, etc. And then the outputs between these two contracts are linked. And when the trades are happening, you just like you have right? You verify these states on chain yourself. You just run a full node, you verify these states on chain or a light client, and you know the state of the contract at all times. So you don't need to trust it. What is being actually broadcast between all of these people through the validator set on Portal chain, who act as a distributed network of watchtowers, right? They never hold custody. That's the other key thing that I'll come into, which is the non-custodial delegation and how we implemented that. Then at no point in the transaction is there a situation where either someone is in control of your coins, either be that the counterparty or the validators who are broadcasting these off-chain things to each other and to all of the clients off-chain. And then when the epoch lasts roughly 30 days, and when the epoch closes, there's a closing transaction that happens on-chain, and then everybody gets the money. So all of these different off-chain protocols like Lightning, L2, etc., they all differ on how this distribution and closing and security models work. Right? Lightning has watchtowers, there's a penalty mechanism, it's quite different from the way we have it. This was specifically designed for this exact use case, which is any asset, any chain, you want to have permissionless peg out into and out of Bitcoin, and frictionlessly as well. Because otherwise you could have done this with layer 1 atomic swaps.
Right.
Layer 1 atomic swaps could have worked in 2013. It's nothing new. Problem is they're slow, they're expensive, you have to wait many confirmation cycles, and then when you're talking about something that doesn't have predictable block times. I mean, Bitcoin blocks come on average every 10 minutes, right? But what is the actual arrival time of the next block? Nobody knows. That's the nature of the random way in which your nonce discovery and hashing works. And so with the use case that you have, which is an AMM, swap for 30 days, that's long enough, right? And all of these off-chain transactions are happening. And then you broadcast the final state. So let's take a situation where the Portal network of validators who are DDoSed, or they're actually falling out of consensus and your funds are stuck. Because you get the pre-commitment to your assets that you own every time there's a swap that happens, all you have to do is wait for the timeout period and you broadcast it on chain in a non-cooperative case. So you're not actually depending on this validator consensus to exist perpetually or liveness validator said, you just have to wait and broadcast it at the end of the epoch, and you're done. You get your whatever is yours. It may cost you more, not changes, which is a very different security model from bridges. If a bridge collapses, your money's gone. Like what George described. Peg in happened, underlying assets have gone, and peg out, what do? Nothing. This goes back way beyond what we're talking about, right? Like, this is a problem that first was encountered in stablecoins. People said, oh, we're going to algorithmically peg it to the US. There's no way you can algorithmically peg anything to anything.
We learned that with Terra.
Basis. We should have learned that with Basis.
Yeah.
Right? And I actually wrote an article way back when Basis, after talking to Basis, I said, this is never going to work. Okay? There's only one way to maintain a peg consistently, which is frictionless 24/7, 365 redeemability of the underlying asset, and that's it.
Right.
Fact.
I want to say on the word frictionless, and because for a lot of people who hear about testnet and they want to come and build on something, they want to make sure that there's good documentation, they want to make sure they get good support from the team, and they want to come build cool stuff, right? So with the testnet going live, what can people who want to come and build and be part of this ecosystem, what can they expect with the testnet right now?
So two things. We have two products for one. As you have seen the announcements from a lot of L2s and sidechains and L1s, that they're integrating our liquidity router to provide this exact permissionless peg-out mechanism into Bitcoin. There's a second product called Swap SDK, which was specifically built to give this capability to wallets and DEXs that are on single chain. So Swap SDK is very simple to integrate. Our wallet actually acts as a reference implementation in the testnet, but any wallet can go through. So we're talking to all of the leading Web3 wallets, vertical wallets, hot wallets in this space, and they're all very excited because this is a foundational piece of technology. And the way the future looks to us, at least, is you have sidechain or L2. Do you have a permissionless peg-out mechanism or not? There will be ones that do, and there will be ones that don't and fake it. Like I've heard sidechains talking about, we have permissionless peg-out mechanism because our validators will decide. That's not permissionless if your validator has decided for it. Big red flag right there.
Yeah.
And so eventually people will care about security because some of these pegs will go. I mean, I've seen some of these L2s having 2 of 3 multisigs.
Yeah. I hope
hundreds of Bitcoin from other people. It's crazy and wild.
Yeah.
And so security is such a thing where it's very asymmetric. Nothing matters until the only thing that matters is security.
Right.
It's very, very in that way different than all of the way we understand linear progress and exponential progress. So it's crazy that in 2024 there are still people that want to integrate this, but we've had great luck. Any project we talked about, L1, L2, they all want this because see, Bitcoin is a singular asset. We've never had anything like this. It's the system of global seamlessness, the most secure, the most trusted, decentralized system distributed system in existence. So capital automatically flows into there. The usability is there. The usage patterns are there. The fervent Bitcoiner community is there. So naturally, capital will flow into that. And all of these other markets will want to have a permissionless, frictionless path from there to here.
Right.
So instead of taking a risky bridge, paying the toll, or maybe risking the bridge collapsing, you can teleport yourself from one side to the other with more.
That's right. And you want to find good partners to work with as well. We're at this event, and you have a couple of partners that are here between BitL and Sovereign. George, can you tell us a little bit more about those partnerships, and how does Portal seamlessly work with those two?
Let's go back to that question in a bit.
Okay.
All right. One of the things I wanted to talk about is essentially capital. The last thing that Chandra mentioned was about capital flow, and Bitcoin and crypto is meant to be frictionless. There's an issue that we're experiencing today in capital inefficiency, and it has to do with fractionated liquidity. What I mean by that is going back to bridges, they're not just dangerous. What they're doing is they're taking tokens and wrapping them into outside silos liquidity pools, perhaps, that can only be used within one ecosystem. What that means is the original token, the most base layer token, is unavailable to be traded or moved. So if you have a small fraction of each of these tokens that are moved to potentially hundreds of different ecosystems, you're then taking possibly half of the entire liquidity and branching it out into places that are nearly inaccessible. So this is one of the issues that bridged tokens do. So instead, what if the base layer token was simply available inside of each of these ecosystems itself? You would then be able to reunite this fractionated liquidity into one giant pool. That's something that Portal Bitscaler can make possible.
Yeah. And it's an element of the safetiness, the safety and the security around these. It's not even really a bridge, right? You're directing in a way, you're portal, right? From here to there, and then frictionless, safe, and you're not having to deal with all of this security risk of your money falling into a silo and disappearing. Like, Bitcoin is already scarce. We don't need to lose it in any kind of transaction period. So, like, how do we make sure that it's going from one place to another as securely as possible,
Yes.
and at a price that people aren't breaking their necks over? Like, we do not need another ETH gas summer of like just outrageous fees of doing anything. So hopefully we're getting to a place where people want to be moving their money. Portal can help be that bridge to do this.
So George made an excellent point about liquidity being siloed into other. So if you look at the landscape right now, there's about 115 or so L2s. They all want to have your Bitcoin being tinselled, right? A multi-sig usually, or suppose vault, like Alex chain. And then what happens is, then you do whatever the functionality is that the L2 does. But when you lose people's Bitcoin, every time you do that, you're going to lose trust in this process, and every other market gets affected, sidechain gets affected. And so the total volume locked. I tell people that when they brag about the TVL on our sidechain is this high, that actually means you're not securing, that is not securing your chain. You are having to secure 1,000 people's Bitcoin, which is a horrible place to be in.
High risk.
High risk. And so the easiest alternative is don't do that. Deploy our contracts. It takes 1 day of lift from your engineering, full-time engineer's worth of work, and a half day worth of work for us. We verify the contracts, look at your consensus mechanism, look at your architecture of your EVM or whatever side chain, and then it's done. So why wouldn't you do this? Like I said, the market's going to bifurcate into those that have it and those that don't. Cars that have seatbelts, cars that don't. Cars that have
And there are no cars that don't have seatbelts anymore.
That's right. That's exactly right. Because if you don't have seatbelts, it's a must-have. And people realize, yes, there are some crazy people who would drive without putting their seatbelts on, and seatbelts are intrusion. But it doesn't work like that. So there's no cars that don't have seatbelts. So
those people are suicidal.
Yeah. So I think this is the way market shakes out, because people are going to start demanding, what is the security model? How secure are my funds before I play in your system? And so the answer is, yes, we have it, or we're going to obfuscate it with some zero knowledge, blah, 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 or a bridge or this and that. And I was like, oh, it's the most secure bridge ever built. It's like, yeah, that's not.
So full circle back to, yes, we have it. Obviously, you guys have it. And now you have two companies that want to be dealing with it, which are Sovereign and BitL.
Sure.
So tell us a little bit more about that.
So Ilan Yago from Sovereign has been friend for a long time. He and I have been in the Bitcoin space forever. It's great to see what he's put together on Sovereign. He's tried lots of different models that have each taken effect, and now a Bitcoin layer 2. So what's really excellent about this, along with BitLayer and many other Bitcoin L2s that are cropping up into the marketplace, is that their specialty is to build smart contracts on top of Bitcoin to be able to bring EVM compatibility to Bitcoin. The only issue is that they are locked within their own ecosystem. It's not a problem because what we have been able to do with Bitscaler is to come in with our SDK and allow for liquidity into and out of their ecosystem. So within the Bitcoin layer 2 that each of these are building, you are essentially connecting your assets that are not just their own native assets, but also the assets of projects that would like to build within their L2 to be tradable in one click natively without bridging to Ethereum or to Solana or to Arbitrum and all of these ecosystems. And for those dApps that carry our SDK, all of these Bitcoin layer 2 tokens, the sovereign-based tokens, the bit layer-based tokens, will be available for trade in all of the partners that have our swap SDK installed. So essentially making extra liquidity to be able to flow to and from other chains for the partners that we're working.
There's one other point that I want to make on what George just said. So let's say you're a sidechain, you have your XBTC asset, right? Once you deploy the liquidity router contracts on Bitcoin and on your chain, your swaps are all to a USDT and then to whatever asset that is there. So let's say 60 of these chains are when I was mastering where Bitscaler. What happens is every one of them can just need to provide liquidity for their asset against USDT. And because what looks like one swap to you is actually two swaps to the USDT pool and to the other asset, you get end to the end pairs from every other compatible chain that's using Bitscaler. So you get that advantage. You don't have to fight for scarce liquidity. The game is not fighting for scarce liquidity to build your thing. The game is actually to have utility on your side chain that produces a lot of value, which you can deliver as yield to people who invest in a project or people who've participated in your community. And so you get two things. You don't have to fight over liquidity. You get end-to-end pair tradability. It's fast, cheap, frictionless. It's secure. And so I think that's why our sales cycles have been so short. And that's why our sales pipeline has been so blocked, in the sense that we can't necessarily scale up integrations, even though it's easy. It still takes a lot of time and work and money and effort and engineering to do this, right? So, but we're not, obviously we're in it to win it because...
Which makes you very careful with the partners that you pick, especially at this early stage of doing this. But it's also strategically probably why you just decided to come out here to Bitcoin Nashville. So as we wrap up here, why Bitcoin Nashville? And of course, you're here with some of your partners, and I'm sure you've met several other new companies that you potentially want to work with. How's the experience been here at this conference? And, are you expecting to do any other conferences later this year? Or what's the roadmap look like for the rest of the year that you can share?
Absolutely. So after the testnet, we are entirely focused on adoption, right? Adoption metrics. We have internal KPIs on how people are using it, how many projects are integrating it, what is the transaction. And the mainnet will happen when our validators press the button. After that, the development company, us, we continue to support technically whatever it is that the protocol needs. We have our own ways of deploying things and asking for validator consensus. Some of them will fail, some of them will succeed. It doesn't matter. The community makes that decision. But we are so excited for native perpetuals on Bitcoin, not on any sidechain, native perpetuals on Bitcoin, stablecoin. And then we're super excited about real-world assets and a specific class of real-world assets. So when I look at real-world assets, I don't think about, we're going to have to tokenize stocks. The stock market is hyper-efficient. It's been built over 100 years of legacy infrastructure that's perfected in a competitive environment. Real estate. Efficient markets exist. Digitally native goods like tokenized US dollars and fiat obviously has empirically been proven to be a a huge market and vast demand for in-game goods. I'm super excited about that for two reasons. One is the number of kids that actually grow up with games as their primary form of socializing and entertaining themselves is through the roof. It's the biggest entertainment industry in the world, bar none. It's not sports, it is not Hollywood, it is not media, none of these things, right? It is esports, which is crazy. And these digitally native assets, the games that work really well at scale, the publishers don't actually want to enable tradability. Right. If there are permissionless but they still have, the kids are trading them all the time. They're trading their accounts in back alleys for gift cards. They have value because of the social consensus around the skill and the effort it takes to earn certain things in a game. So the first wave of Web3 is VCs mindlessly spouting bullshit like, oh yeah, now you're going to take this bike from this whatever race game, and then you're going to transport it into this first-person shooter game, and now we're going to have combat. That's stupid. I don't think any of these people understand how hard it is to build a great game, right? The narrative, the game mechanics, the story, the characters, all of that stuff, the onboarding process, it's art. So if you don't have a great game, all of this other stuff about tradability, Axie Infinity, that's all just utterly irrelevant. Then you have a great game. The way Bitcoin or blockchain actually makes it better is that you have, let's say, all these earned goods can be displayed on. Those are collectibles, just like you collect baseball cards. You collect these digital artifacts from different games and that showcase your skill and level, and you can trade them, right? Permissionlessly, natively into and out of Bitcoin. And so, what is your adoption pool right now? David Bailey said it's 50 to 70 million people in the US. And in 10 years, when these kids grow up, there you go. That's your hyper-Bitcoinization. Okay? So they're natively used to these digital artifacts having value and being exchangeable freely into Bitcoin. That's how we get to hyper-Bitcoin. So that's something I'm super excited about. There's a little bit more detail there in terms of you don't need the game to be on-chain or game logic. You just need the publisher signature to verify that it's actually the same thing. There's some constraints that these artifacts are not created arbitrarily and they have some level of scarcity to them. But that's kind of details. What I learned from the Bitcoin conference here in Nashville is that people here are much more thoughtful than on general crypto conferences that I've been to, because they all come from the Bitcoin mindset. Bitcoin mindset is security first. We think deeply through everything. Changes are going to be infrequent and rare because every change has a trade. And that mindset pervades the Bitcoin community. Meeting like-minded people, it has been wonderful. It's the energy is and the optimism are great. Obviously, some of that comes from the price action, but irrespective of that, this has been a great experience. We'll probably be there. The token event in Singapore, and we'll see how it goes, and make it likely Korea Blockchain Week as well.
Awesome.
And that'll be hopefully a great end to an already eventful year.
Absolutely. So we got a really good timeline of what's going on, and enjoyed all this past year real quick. How's the experience been for you, and what are you just looking forward to for the back half of the year?
Well, as Chandra said, we're at a Bitcoin conference, and so there's a different caliber of folks who come to this rather than to token shiller conferences, which I've seen
many of.
I've been connected to the Bitcoin space since 2013. I first built an altcoin and Bitcoin exchange, which is funny even saying that out loud, because that is what it was called. It was a Bitcoin to altcoin exchange. Right? That was what it built. And after that, I was working on the first Bitcoin debit card in the United States. The type of people who I met back then have become lifelong friends. I'm so excited when I get to see them, because they're just so different from new entrants into the space, who are number go up people, who are the trading degens. These people don't trade. Many of them know the charts, but they're not trading. They're holding their Bitcoin. And actually, had I had that mindset when wanting to build a Bitcoin debit card in the US, maybe we wouldn't have built a debit card because people would just be holding their tokens rather than spending them. Point is that because of the mindset that my team has, we have Chandra, who's a self-proclaimed libertarian, maybe no anarchist.
Bitcoin maximalist.
Bitcoin maximalist. We
Self-maximalist.
right. We have Austrian economics principles and game theory based on projects that we've worked in the space. We've been designing what I hope to be the perfect way for Bitcoin and Ethereum and Solana and all of these other tokens. I can't think of another way for this to occur. I mean, many times we were scratching our heads. Maybe this is impossible. And we've been able to build on that. So I'm excited about it. And my old Bitcoin friends really applaud me for having stuck it out to make sure that Bitcoin is included in DeFi. Once that happens, how much capital is likely to flow from the pipes of Ethereum and Solana into the BTC ecosystem? And vice versa. When nobody has to use wrapped Bitcoin and they can use native Bitcoin to, I want to say dangerously, play with these yields, right? Because it's not guaranteed, right? But at least there's no custodial risk. So if they would like to find yield on their Bitcoin through Portal, they can. It's awesome.
And I definitely appreciate both y'all's perspectives on just everything that's happening with Portal, but also just like regularly what's happening at this conference and the sentiment around like why are people in this space and like, why are they so close? Just on at the core, what is cryptocurrency? Where did it come from? Bitcoin. That's why we're all here. And why are we building towards the future of that crypto has promised us? And you guys are hyper focused on making that reality. And I actually want to take this next moment in our session to ask you some personal questions. We have a session called Quick Hitters. This is where we ask our favorite Web3 heroes some of their rapid fire questions and ask. You can answer as quickly or as short form as you like. Are you up for the challenge?
Yes.
All right.
A quick word from our sponsors who's ready to navigate the cutting edge of tomorrow's legal landscape. Because at Zuber Lawler, they're not just attorneys, they're visionaries. With expertise in emerging technologies like AI, blockchain, and the metaverse, they're paving the way for you to seize the future. For mergers and acquisitions to IP, their selective team delivers strategic solutions tailored to the ever-changing world of technology. Join us at Zuber Lawler, where the future meets the law at zuberlawler.com. Back to the episode.
So we'll start with you, Chandra. What is the first thing you remember purchasing in your life?
First thing I remember purchasing myself, candy.
Candy. Okay. Do you remember what kind of candy it was?
I think it was, what is that thing that, not cotton candy, but it's kind of similar.
Okay.
Yeah. Huh?
Some taffy.
Yes.
Yes.
Yes, taffy.
Simple.
I can't remember the first thing I bought. It probably was candy, but let me say that the first thing that comes to mind that I bought meaningfully was a car. And I was 17. I had saved up a lot of money to buy a car. I didn't even tell my parents. I just bought it. And I came home with this car. And they're like, you're not allowed to have a car. They took it away from me.
That's a,
Good parents. I know his parents.
That's awesome. Because they're also like, dude, do you know insurance, all this other stuff? Just that's like. So what kind of car was it? What kind of car was it?
No, I knew. This is going to be hilarious. It was a Geo. It was and I loved it for some reason. I loved the look. I didn't understand how crappy of a car it really was, but it was red and it was beautiful and it was within my price range.
Yeah, that's awesome.
Surprisingly, my first car also happens to be a Geo.
Really?
Yes.
Okay.
Yeah, Geo Prism.
Yeah. So bonding on that as well. Okay, look, we'll reverse it. So, what is the first thing you remember selling in your life?
I don't know. Okay, selling. Yeah, probably lemonade. Yeah, lemonade stand. I'm sure that's an answer a lot of people have. But instead, how about this? In high school, I created a company to sell website development sales. So I was actively going to businesses to try to get them to let me build their websites.
That's wild. HTML coding websites like
That's right. That CSS wasn't even around back then. Kittens.
yeah, that's awesome. How about you?
First thing I sold was a textbook. Tells you how nerdy I am.
Hey, people need them. So, if you could buy anything in the world right now, price, money didn't matter, what would you purchase?
Things that can be bought, right?
Things that can be.
We're not talking about people in relationships.
Yes.
People can be bought.
Yes, but I don't want to.
Relationships can also be bought.
If I can buy anything in the world, what would I buy right now? I would probably buy an island and start my own governance system.
Nice.
You know, but having learned all of the lessons from hundreds and thousands of years of failure, we can do better. I think governance is software. Our governance software is horribly broken, and I'd like to do something like that.
Awesome. All right. How about you, George?
I would buy therapy for the world.
I think the world could use that. Okay, if you could pass on one of your personality traits to the next generation, what would it be?
Mine would have to be grind it out, persistence, tough it up, and yeah.
Let's go.
Go with the flow. Know that things may not seem like they're working out at the moment, but that you can know deep down somehow you'll get through it. And if you can know that you will get through a dark, tough time in your life, that means that you don't have to stress so much about it.
Yep.
And if you can live life without that type of stress, the world seems like a leave of loss.
I like it. Now we're going to reverse it. If you could eliminate one of your personality traits in the next generation.
Complacency.
Worrying.
Or nothing. So,
Yeah.
And two more questions. Just when you think about the growth and how far Bitcoin has come, what is a lesson that if you could tell yourself, other than hodling, if you go back in time when you're first starting this journey, what would you tell yourself? What is the wisdom you give yourself?
Man, this is the most obvious question of all time for me, because if I could go back in time to 2009 or 2010, I would never sell anything until maybe trade, maybe right? Like that was the, yeah. And if I have to give myself some advice other than on trading, I would say, your instincts are right. Do not get distracted by whatever's happening in other people's heads. Always go with your instincts. Always trust yourself more than what you hear.
There are two things. Because I've seen so many bull and bear cycles, there were times that I've had my doubts. And it doesn't mean that I sold because I was like, Bitcoin's going to zero. It's not it. I sold out of necessity. Had I had better conviction, I would have figured out ways to maybe afford my lifestyle, maybe cut back lifestyle in order to know that that Bitcoin is for real, it's here to stay. Simultaneously, what none of us realized in the beginning is just how quickly it would become $20,000 and how then quickly it would become $70,000. We thought this would be a 25-year cycle just to get to the price that we're at today. So the fact that it got there in only 15 years from inception is mind-boggling. So I would tell myself in it.
Yeah, both good ones. We always like to wrap with a bonus question, and what more fitting being at a Bitcoin conference. This was a question that was posed to me while at the conference that I think can be very powerful. One word answer. What does what does Bitcoin mean to you?
Liberty.
Can't do it in one word. Opportunity.
Like that. For me, it was freedom.
And now for a quick word from our sponsor before we dive into the next segment. Are you ready to take your sports predictions to the next level? Look no further than maincard.io, the fantasy management platform that's taking the blockchain world by storm. With MainCard, every card is a ticket to excitement. You can predict sport outcomes, trade cards in the marketplace, and challenge opponents in thrilling weekly duels. And don't wait. Head to maincard.io now and start earning rewards with your NFTs. because it pays to be early. And now back to today's episode.
But awesome. Well, this has been great being able to catch up, learn more about y'all. We always like to wrap up with giving a moment for shout outs. You know, you do a ton of work, you work with a lot of people, but it doesn't mean that everyone necessarily gets brought up to the light. So this is a moment if y'all would like to shout out anybody, you can go in.
We have an amazing head of biz dev named Robbie, who is actually doing our work right now for us while we're here joking around on camera. He's been fantastic at getting us so many of his partnerships, working the partnerships with BitL and Sovereign that we're proud to announce today. So I'm also happy to give a shout out to those partners too.
I'd love to give a shout out to the engineering team, both crypto side of things and Rafa. Incredible talent, and we are so lucky to have them. And then we are so lucky to have partners like Tari, who are super creative, super innovative, and do BitL, Sovereign. List of partners is long, obviously I can't name them all, but yeah, it's been a wonderful ride. Tough times, but
Excellent. Well, what are ways that people can follow and keep up with everything Portal's got going?
on Twitter at Portal_finance is our handle. Huh?
Not anymore.
Oh, at Portal to Bitcoin. Yep. He's right.
There you go.
There you go. At Portal to
Bitcoin.com. All right, that's
Yep.
that's
Portal to Bitcoin.com and at Portal to Bitcoin on Twitter. Personally, my Twitter handle is at CSENTROPY. It's at CS Entropy. You can see it on our website. Yeah.
Perfect. Well, and you as well, do you have a stipulation?
Yeah. Don't let our testnet go to waste. Use it. Tell us what you think.
Yes.
We're really excited about it, and there are rewards for people who are able to use it. So
Great points.
And exactly. So we'd love to hear your feedback. Go to portaltobitcoin.com and get started there.
Perfect. Well, George, Chandra, appreciate your time, and
Pleasure.
Thank you so much.
Thank you, Richard.
The views and opinions expressed on Edge of NFT reflect solely those views and opinions of the show hosts and its guests. Please make sure to do your own research. Our show is not financial advice. You understand that you are using any and all information available on or through this podcast at your own risk. Whenever making financial decisions, we recommend doing your own research and talking to your accountant for financial advice. From time to time, we may feature sponsored content on the show for which we receive value, and we may share links for which we receive a commission if you make a purchase through one of those links. Refer to our website, www.edgeofnft.com, for our full disclaimer, terms and conditions, and privacy policy.